Good day, trader. Sure you're having a great time. How is your trading business? I hope it's been profitable. In this video, I would be sharing my expectations for the new trading week starting the 6th of October 2025. Now, if it's your first time seeing my video, my name is Maxwell Emmanuel. I'm a Forex trader. I've been trading Forex for over 10 years, and over the years, I've trained over 500 individuals, and I've also developed strategies, traded with lots of strategies. And it's my greatest desire to help in new traders, succeed in trading by sharing my experience and my strategies, okay, with new traders. I believe it's very, very necessary. It is very necessary. New traders needs to be guided. You need to learn the right way to trading. And that's the reason I do the things that I do. Come online to share my experience and my expectations for the new week. I want to assume that everyone watching this video have a little experience in trading. Probably they have developed their own strategy. They have a system they use in analyzing the market. It's very important. You shouldn't execute the instructions or the information that I share in this video blindly. You should have little experience in trading. At least you should understand the basics of Forex. You are not expected to execute these instructions or these informations blindly. So I want to assume that you watching this video, you have little experience in trading. And if you don't, I have created a trading course, a beginner guide to Forex trading. In that course, I shared also my unique trading strategy. So if you're new to trading, I would employ that you get the course. You can find a link on the description box. It's very important that you learn the basics, please. Very important you learn the basics. So I do this every week. The first video, I drop it on a Sunday. Okay, before the market opens, I ensure that I drop my weekly bias on the video. It should be available on. I ensure it's available on Sunday. Okay, so that you get to watch it before the market opens. Then also, I give you updates on Tuesday, Wednesday, and on Thursday via the live stream. Okay, so watch it, and on Tuesday, Wednesday, Thursday by 10 a.m. You could also join the live stream to get updates. It's very important to join the live stream to get informed. So first thing I do is to look at the calendar. I start my analysis by analyzing the fundamentals for the week by looking at the calendar. And the calendar I make use of is Forex Factory. Okay, so I said we'll be starting from the 6th, which is Monday, or let's start from the 5th to the 11th. So let's see the major news. I'm interested in the major news. Okay, I'm interested in the major news. You can see I'll filter out the minor and low impact news. All this I've already filtered all this out. I'm only interested in the major news because I believe those are the news that really drives the market, okay, that have a high impact on the market. So I'm only interested in those major news. So on Sunday, there are no major news. Then on Monday, by 6 p.m., President Lagarde, the Euro Central Bank president, will be speaking by 6 p.m. This is Nigerian time. And also by 6:30, Bank of England Governor Bailey will be speaking, okay, by 6:30 p.m. So during this time, should expect high volatility on Euro and GBP pairs. High volatility is expected on this pairs. And on Tuesday, there are no major news. So most likely this species, the impact of this species would play out on, will be seen on the market or will be felt on the market on Tuesday. Tuesday, since there are no major news. So we should expect high volatility on Euro and GBP pairs on Tuesday after this species. Then on Wednesday, New Zealand official cash rate will be released by 2 a.m. Nigerian time, and also the rate statement same time. Then the Bank of Japan governor Ueda speaks. Okay, no time is given for that. Okay, then by 7 p.m. we have FOMC meeting minutes in the United States. Then on Thursday, unemployment claims. Time is not given. Okay, no specific time for that. And 1:30 unemployment claims also will be released. That was on Thursday. Then on Friday, 2 a.m. Australian dollar. Governor Bullock will be speaking by 2 a.m. Nigerian time. And card employment change and unemployment rate will be released by 1:30 p.m. Nigerian time. Then also average hourly earnings, non-farm employment change, unemployment rate. Now, these three major news were supposed to be released first Friday of the month. It was cancelled. First Friday of the month, that was when NFP news is released. So it was cancelled this past Friday. It was cancelled. So hopefully, as you can see, no specific time. So it can also, they can still cancel this news. Okay, this coming week, it might still be canceled, but you should watch out for it. Okay, so hopefully before Friday, the specific time for this news will be given. Then by 3 p.m., consumer sentiment from the United States and inflation expectations will be released by 3 p.m. So as you can see, we have a lot of major news for the dollar this week, meaning we should expect high volatility on USD pairs this week. So, like I said earlier, I believe you have your strategy. You know when to buy and when to sell. Okay. So you have to be very conservative when high impact news are being expected in the market. I always advise you go conservative. They should be conservative if major news is being expected, most importantly from the United States. You have to be very conservative. It's not time for you to go aggressive. You need to be very conservative. Now, after we're done looking at the calendar, we look at the DXY, that's dollar index, to know if dollar is bullish or bearish. Okay, we use the dollar index to measure the strength of the dollar. If dollar is bullish, you want to buy the dollar. If dollar is bearish, you want to sell the dollar. So we'll start by looking at okay, we just entered into a new month. So let's see what we have on the monthly chart before we go down to lower time frame. I do top-down analysis. Okay, start by looking at the higher time frame to know the trend on the higher time frame, then go down to lower time frame to identify entry levels. Okay, so as you can see, last month's candle closed as a doji after sweeping liquidity residing at this low. Okay, it closed as a doji. Now, after the close of this doji on the monthly time frame, let's go down to lower time frame to see if it's created a fair value gap on a lower time frame, like the weekly time frame. So on the weekly time frame, what can we identify here? We have this low. As you can see, that was used to sweep the liquidity residing at this low. So let's go down to daily. What we have here is a bullish reversal pattern. You can see on the weekly time frame, we had a doji and the next candle closed bullish. This is a bullish reversal pattern. This is a bullish reversal pattern. Okay, so let's go down to daily. What do we have on the daily time frame? Okay, cool. So we have, as you can see, what we have here, there was a shift in market structure at this point, the daily time frame. And you see that shift in market structure has occurred here. And after the shift in market structure, we expect price to retrace back to a discount area. Okay, price is expected to retrace back to a discount area to fill the imbalances it created. So we had this imbalance on a daily time frame. We also had this imbalance on a daily time frame. So price is expected to retrace back to fill these imbalances before going bullish. So going by the monthly and the weekly time frame, the bias is bullish. Going by the pattern on the monthly and the weekly time frame, price is expected to be bullish. Most likely, dollar is going to fill this gap, this imbalance, and also fill this, sweep all this liquidity residing at these heights. Okay, that is what I see playing out on dollar index. So this week, I would love to see dollar index pull back to this discount area. Use the Fibonacci tool to identify premium and discounts. So if we apply our Fibonacci from this swing low to this swing high, okay. So swing low to this swing, I want to see price pull back to a discount area before we buy. So as you can see, this pullback to fill this fair value gap at this point is at a premium area. This is a premium. Price needs to pull back to a discount area. So this is where I would be considering going bullish. So for this coming week, I would expect, I'd love to see price pull back to this zone before going bullish. So my bias starting this week is bearish on the dollar. I am bearish on the dollar. I would only consider buying if price pulls back to fill this fair value gap. This is where I might consider going bullish on the dollar. Next, look at the yen basket. I use the yen basket in measuring the strength of the yen. Okay, I use the yen basket in measuring the strength of the yen. So if the yen is bearish, I want to sell yen. If it is bullish, I want to buy the yen. Okay, so the weekly time frame, can see what we had here. On the weekly time frame, we had, this is an engulfing pattern. Last week candle closed strongly bullish. Strongly bullish. That indicates that we have more buyers than sellers. It indicates that we have more buyers than sellers, and price tested this resistance area and there was a strong rejection on the weekly time frame. But let's look at the monthly time frame. Let's start with the monthly time frame. Okay, so on the monthly time frame, what do we have on the monthly time frame? As you can see here on the monthly time frame, we have last week candle. You can see last month's candle was strongly bearish. It was strongly bearish, but before the close of the month, price pulled back and closed at the equilibrium for that month. Okay, you can see buyers came in towards the end of the month and pushed price back up to this level. And so far this month, it's been bullish so far, but sellers have already showed up also. You can see they've pushed the price down to almost equilibrium. You can see that also. So let's go down to, so neither the buyers nor sellers are in control so far this month, okay? No one has gained the upper hand so far this month. So on the weekly time frame, price pulled back and tested this resistance area. There was strong rejection from that area. Let's go down to daily. On a daily also, daily confirms the direction. You can see we had on Thursday, we had a spinning top and the next candle closed bearish. This is a bearish reversal pattern. This is a bearish reversal pattern. So the next target for yen, I think, will be this. This will be the next target. This fair value gap, which is at a discount area. Okay, this will be the next target for yen. So this week I expect yen to be bearish. The bias for yen is what? Bearish, okay? Because of the pattern we have here on the daily time frame. This should be bearish. Now let's go down to 4 hour. So on 4 hour, it has created a fair value gap. So I would love to see this gap it has created here filled. This gap needs to be filled. So this is where I will be considering going So as you can see here, a shift in market structure has occurred on the 4-hour time frame. First thing was they did here was to sweep the liquidity residing at this relative equal high. You can see first thing they did was to sweep the liquidity. After sweeping the liquidity, we had this shift in market structure at this point, and it created a tiny fair value gap here. You can see this fair value gap here on the 4-hour time frame. It created this fair value gap, filled that fair value gap. You can see after filling the fair value gap, it gave us an engulfing pattern indicating continuation. That's a bearish continuation. And now it's created a new fair value gap. So it needs to fill this new fair value gap it created here, okay, before going bearish, before it continues with its bearish move. So let's see 1-hour time frame. Okay, so on 1 hour also, we still have, I think, this fair value gap has not been filled completely. This fair value gap has not been filled. So these are the areas I would be looking for myself. This fair value gap or this fair value gap. These are the two areas I will be looking for sales. Okay. Well, prefer it comes sweep the liquidity residing at this highs, then fill this fair value gap before going bearish. Okay, this will be a very good area because this is a premium area. We apply our Fibonacci from this swing high. We apply our Fibonacci from this swing high to this swing low. We would love to see price pull back to a premium area, which would be at this zone. So this would be a very good area to consider selling yen baskets. So my bias for yen starting this week is bearish. Okay, my bias for yen is bearish. Okay, so let's look at currency pairs. I'm just going to analyze two pairs, GBP USD and EURUSD, and probably I'll look at gold also. So those are the three pairs I'll be analyzing on a weekly basis. Okay. Then during the live stream, we'll look into other instruments. Okay. That's when I analyze pairs that you're interested in during the Tuesday, Wednesday, and Thursday live stream. That is when I would analyze pairs that you are interested in. Okay. So let's start with GBP USD. Let's start with the monthly time frame. So just new months just entered into a new month. So it's very important that we look at the monthly charts to know what's happening there. It is very important. So it doesn't matter if you're a scalper or a day trader, you need to know what's happening on the monthly time frame. So what do we have on the monthly time frame? You can see last month's candle closed as looks like an indecision candle, spanning top. Okay, and I think this pullback we saw 2 months ago, this retracement was to fill a fair value gap that was created after the formation of this engulfing pattern. I think that's the reason for this retracement. Let's just confirm. Let's see weekly time frame. So you can see we had this fair value gap on the weekly time frame. Okay, so that could be the reason for the retracement. You can see after it filled that fair value gap, you can see the pattern we had there. This is a shooting star. This is a shooting star. Okay, this is a shooting star. Shooting star indicates changing trend from bullish to bearish. You can see that. And if you go down to, let's go down to daily time frame, I believe a shooting market structure has occurred at this point on a daily time frame. Let's just confirm that. Okay, so you can see what we have on a daily time frame. Swept liquidity that was residing at this previous high. You can see they swept the liquidity residing at that previous high, and at this point, there was a shift to market structure on a daily time. You can see or the shift in market structure on the daily time frame. And like I said earlier, after the shift in market structure, price is expected to pull back to a premium area. So you can see that price actually pulled back to a premium area. If you apply a Fibonacci, okay, from this swing high to this swing low, you can see price had to pull back to a premium area to fill. You can see the fair value gap it's created here. Can you see the fair value gap it's created here? It pulled back to fill this fair value gap. I believe you can see that. And after filling that fair value gap, you can see the rejection, strong rejection from that gap. You can see it. Can you see that? Okay. And now it has created a new fair value gap here. So it's most likely it will come through this fair value gap before it continues with its bearish move. So it's created a fair value gap here, and it's also created a fair value gap here. This one got filled last Friday, I think, yeah. Last Friday, okay. This fair value gap it created there got filled. There was this rejection from that. So it's likely going to pull back from this zone or goes to fill this fair value gap on the daily time frame before it continues with its bearish. That is what I see playing out on £10 USD. Okay, so it's likely going to go fill this gap or continue its bearish move from this point. Okay, because if you apply a Fibonacci from this swing high to this swing low, this is a premium area, right? This is a premium area. But if you work with this swing high to this swing low, this will be our premium. So price is expected to pull back to that zone. Okay, so that's my take on £10 USD, Euro USD. Okay, sorry, maybe £10 USD. So Euro USD, as you know, both pairs are positively correlated by that 60 to 70% of the time. GU and EU move in the same direction. So you can see that the pattern we have on EU is similar to what we have on Euro USD. So you can see on Euro USD, we have a shooting star on the Euro USD. And also if you apply a Fibonacci on Euro USD from this swing high to swing low, you can see that price is currently at a premium area, and at premium area, we are expected to sell. So you can see, so we have this fair value gap. I think we had this fair value gap on Euro USD. Price has already tapped into that gap, right? Price, I think, has tapped into that gap. As you can see, we had a strong rejection from that zone. You can see that. And what pattern do we have here? Last month gave us a shooting star candle, which indicates changing trend from bullish to bearish. Now let's go down to weekly time frame. Should have a bearish reversal pattern on the weekly time frame. As you can see, we had shooting star and the next candle spinning top, bearish spinning top. This indicates changing trend from bullish to bearish. Okay, so let's go down to daily. So on a daily time frame, Euro USD created a value gap here. Let's see if it has filled that gap. Let's see. Okay, so it filled that gap last I think it was Tuesday or Wednesday. Let's see, this was Wednesday, Thursday, Friday. So this candle was used to fill that gap, and you can see the pattern it gave us after filling that gap. We had a shooting star and a spinning top indicating changing trend from bullish to bearish. So it created a support on Friday. So for us to sell, we need to ensure that the support is broken. Okay, ensure that the support is broken before you consider selling. So that's my take on Euro USD. My bias on Euro USD is bearish. And if Euro USD sells, it is most likely going to sweep all the liquidity residing at this. Okay, it's likely going to sweep all this liquidity, and after sweeping those liquidity, it's likely going to fill this gap, this fair value gap. Okay, so that's my expectation on Euro USD. I expect Euro USD to sell, to go bearish this coming week. So let's look at gold before I end this session. So gold has been bullish for some time. It's been strongly bullish for some time. Like I did advise my student, this is not the right time to buy gold. As far as I'm concerned, it's overbought, though the trend is still bullish. Okay, though the trend is still bullish, this is not the right time. Okay, I advise you wait for a strong reversal on gold to a discount area before you buy. Okay, that's my take. So if I'm going to take any risk on gold, I would love to see gold retrace back to one of these gaps, this fair value gap that has not been filled. Okay, where these are areas I might be considering buying gold, but at the moment, gold is too expensive as far as I'm concerned. As far as I'm concerned, you can see where gold started buying. It's been buying for weeks, for months now. So buying at the current market price, as far as I'm concerned, is at a very high risk. Very high risk. As a trader, you want to buy cheap and sell high. That's the best way to make good profits in the market. So buying high is at a very high risk. Yeah, buying high is at a very high risk. Price could crash anytime soon on gold. So I'd rather look for sales than buy. Okay, so you can see Friday, this was Thursday, we had shooting star. On Wednesday, on Thursday, we had a spinning top, a bearish spinning top. So with this pattern, gold was supposed to sell on Friday, but as you can see on Friday, it bought. So let's see what we have on. So on a daily and 4 hour, it's still indicating that gold is bullish. It's indicating that gold is bullish, but I have no advice that you buy gold right now. Okay, so coming week, they might want to first sweep the liquidity, residing at this previous high before going bearish. Okay, they might want to sweep the liquidity residing at these highs because the normal retail traders would have executed sell. Their stop losses will be residing at this previous high. So they might want to sweep this high. Okay, I think that's what's playing out in the markets. They want to sweep this high before going bearish. Okay, so you should look out for your sell pattern after this liquidity has been swept. That's my take on gold. Okay, so that'll be all for this video. I don't want it to be too long. If you have any question, you can drop it in the comment section. And if it's your first time seeing my videos, kindly subscribe to the channel so that anytime I drop videos like this, you get notified by YouTube. You need to subscribe. And like I said, I would give updates on Tuesday, Wednesday, and Thursday during the live stream. If you have any question also, all your questions will be attended to during the live stream. Like I said in the beginning of the class, if you're a new trader, you're an inexperienced trader, and you need someone to mentor you, to guide you, to show you the right way to successful trading, I would employ that you get my Forex Mastery course, okay? And when you get the course, you have access to training, you have access to mentorship. And during the mentorship, um, all your Forex trading questions will be attended to. You have access to the trading community, you have access to the Zoom classes. Okay, so I would employ, it's very important that you learn a strategy. If you can't develop one yourself, you have to learn strategy. You need a strategy to win consistently in the market. So you should get the course. If you are a struggling trader or you're new to trading, you should get the course. Find the link in the description space. Thanks for watching. I'll see you in the next video.